Another weekly update of the rental house versus high income ETFs, season 2, episode 6. So this week's subtitle is basically the stock market was kind of a dud this week a little bit, at least for me it was. And don't forget to subscribe. And this is not financial advice. I'm just showing what I'm doing with some money that we have. And if you go back to this, we sold a rental house, took that money, invested into some high income ETFs. And this series of videos, is to show how this is going to perform if we would have kept the house versus the ETFs. So let's get started and have some fun. I like to take a look at the stock market in general, just see how it's doing as a comparison to how I'm doing. Despite it taking a dip this week, ended up on Friday almost where it was the previous Friday, actually. In fact, I think it was 691 last Friday. This Friday ended up like at 690. So pretty close. And these are indicators I watch. If you're interested in that, I have some videos on how to set up these in Yahoo Finance and watch things for free. And I kind of explain how I watch these moving averages and this Bollinger Band and all this good stuff, but that's beyond the scope of this video. So how did I do this week? Well, personally, I did pretty good, but my accountant didn't do quite as well. Despite the S&P kind of bouncing back up to where it was previously, the QQQ didn't do quite as well. And because a lot of these ETFs are based on QQQ and not the S&P 500, it kind of didn't bounce back as well as I wish it would have. And another thing that happened is that I'm selling these cash secured puts on. I had some on SoFi, the double leverage Amazon, and TQQQ, and I expect these to bounce back and become profitable or stay profitable. Not sure about the SoFi one, but I had one. I sold cash secured puts at the 24 strike price, meaning I had created a contract to agree to buy SoFi if the price of SoFi dropped to $24 a share. Well, I did this when SoFi was $26 a share, and I earn like $600 to do so. We'll look at that in a second. And SoFi did drop to 24, and not only did it drop to 24, it dropped all the way down below 20 for a while. I think it ended up like at 21. However, since I wrote that contract saying that if it dropped to 24, I would agree to buy it at 24. I kept my end of the bargain and I bought those shares for 24. Now, the reason I kept my side of the bargain is because I had no choice. I had a contract and Robinhood made the trade for me. So that's how it works. And that's okay because this is like part of what's called the wheel strategy. And I got videos on that. So my assumption is that SoFi will come back to 24 and 25 and 26, go back up eventually. And from this point on, I'll do what's called selling covered calls on SoFi and make premium money on that while it's going back up or even sideways. So even if it drops a little bit, I can still make money. Like I said, I have lots of videos out there on option trading if you're interested in that type of thing, but beyond the scope of this. But the other thing is how the other things are doing. I'm at 91,501 approximately, and these are all the shares of everything I'm owning. Like I said, the SoFi shares are new here, so that is that. And this is the activity from last week. I had some margin interest that I paid, got a distribution from MAGY. And here's the SoFi stock I bought at $24 a share. I bought 400 shares of it, and it's already worth only about $8,500, but that's okay. And QDTE, I'm kind of disappointed in the distribution is 58. I'm trying to figure out if they're trying to build up or if they're just having horrible option writing weeks. I'm not sure. And I keep saying I'm going to look into it more, but then I never do. And then Monday I'll get another distribution from MAGY, which is down a little bit, probably because the price of the stock is down. That's okay. That's how that works too. So the other way I'm generating income for this account is through the cash secured puts, the option income. And you see this week here, I was assigned those shares, but I did earn $640 in premium from that contract. So this contract said I would agree to buy the 400 shares at $24. So that's what happened. And it cost $9,600. And the price is like $21 a share right now. So that is worth around $8,500 down here. Like I said, I'll write cover calls on the way back up until it gets back to 24 and then sell those. Now, some people are probably sitting there like, well, what go back to 24? What if this happened? What if that happens? So this is not the first time I've done this. So I want the stock market to work in my favor like every day and every week, but it doesn't always do that. And let's see what else we got going on here. So the other part of the income is the distributions from the ETFs. And here you can see this is for the month of February, actually. For January here, we collected 4,172. And then this here is February. So we got 170, paid the interest on the margin, and then we have $58 from the QDTE. Then Monday we'll get that 148, and I included that 640 from that option income. So we're sitting at a positive 764 right now. And I did not update this. I should have put the 400 shares of SoFi in here that I purchased for $600, I think it was. So I forgot to put that in there, so I'll update that. And the total return since January 1st, so don't pay no attention to this. This is from January 1st, and it actually ended, I think, before Friday. And Friday, there was quite the rally. I don't think this is after market Friday. But for 2026, I'm up 1.68% total. A year ago, I was up 36%, so that was good. So you see the SPY is up, and then you see QQQ is down. So those indexes that are based on the QQQ, like QDTE, that's down 0.5%. And then QQQI is also down about 0.5%. TDAC is down 1.2%. So I kind of expected that. What I didn't expect and what I don't like is AIPI, which has a lot of AI stocks. But like NVIDIA is a large part of AIPI and AMD also. And those both went down quite a bit last week and then bounced back a little bit. So I think that's why this is down so far. Then MAGY is the MAG 7. Amazon took a huge dive last week after earnings, and so did Microsoft. So that's why that is down. So I think that will bounce back up, and I think this will bounce back up too. So I'm just being patient and not going to panic. But if I do panic, I'll report that right here on these videos. Okay, so how are things going? Well, this is how I expected things to go. We started the year out January 1st at 95,000, and I was supposed to be at 99,000. And actually, a week and a half ago, this went over 100,000 for a day or two. And then we had our dip last week, and it hasn't bounced back quite as well. So you see my margin went up because of those shares of SoFi that I bought. Those actually went toward the margin. And what I'm actually thinking of doing is, and I've been thinking about doing some things different anyhow, I may sell some of this MAGY and some of my AIPI, and so I'm gonna keep that margin on track, keep those SoFi shares, and then sell cover calls on SoFi, and that will probably more than replace the distributions from AIPI and MAGY. And then also, I talked last week about maybe thinning these shares out anyhow, AIPI, QDTE, and MAGY, and putting the money back into QQQI and TDAC and SPY-I. So I may actually start doing that this week sometime. I might wait and see if these recover just a little bit, AIPI and MAGY, during the week before I do that. Like I said, I don't think these prices are current as of today. I think this is from Thursday's close, actually. So getting back to here, this is what we expected things to be. I expected to be up 5% for the year. I'm up 1.68%. And for the week, we were down 5.5%. So that is that. And this is to compare how things would be going if I still had that rental house. I wasn't actually going to keep comparing it, but some people are interested in that, so it's not a big deal. So what I'm doing, I'm comparing how things would be if we would have kept that house. So if we would have kept that house, I'm assuming I would have raised the rent January 1st to $800 a month. My expenses would be about $450 a month. A lot of that is the taxes and insurance. And I'm in Illinois. Taxes and insurance is quite expensive. So is where that's at. So we'd be sitting at $78,570 total. I'm also figuring that the equity in the house would grow each month by $233. That's like 4% per year. And those expenses come directly from averages from my tax returns from the past 3 years. And that's that number down here. And also, really not included in those expenses is that when we sold that house, we spent a lot of money over here cleaning, fixing things, and doing a lot of work, actually. Spent $14,000 before we sold the house. we ended up selling that house for $85,000. And so the $70,000 is basically subtracting all these repairs off there, and that's kind of what we netted. And we didn't have a mortgage on that house, it was paid off. So the whole $70,000 kind of hit the bank account. The other thing I didn't really include is that we did have to pay some tax on that sale. That was probably about 20%. So probably another $14,000 actually, but I'm not calculating that in there for this experiment. So overall, since November of 2024, so we're looking at what, like 15 months now, the rental house would have brought in about $78,570. That is if we took the money we've collected in rent and sold it tomorrow and would have no expenses in selling it, which obviously we would. And then the ETFs actually has grown to 91,501. So those are real numbers. And so we're up still 12,931. So despite the stock market going down, kind of sputtering this last week, we're still doing quite well. And I'm still happy, and I don't get any phone calls in the middle of the night about any sewer problems or anything like that. So that's always a great thing. So remember, this is not financial advice. It's just me sharing what I'm doing with some money that I probably should be more responsible with, but it is what it is. So if you like this type of thing, the good, bad, and the ugly, that's great. Go ahead and subscribe, and we'll see you in the next video.